Back in 1996, Marvel wasn't making blockbuster box office hits. Instead, they were filing for Chapter 11 bankruptcy, and the company's chances for survival looked nearly impossible. The company had a $610 million mountain of debt, and their comic book business was dying as sales were drying up. With their backs against the wall and the company's entire future on the line, Marvel would decide to bet everything they had left in one last attempt to turn around the company. Marvel's bet involved taking on $500 million more in debt so that they could produce a movie of their own for the first time. And that movie was Iron Man. And the stakes for the Iron Man movie could not have been any higher for Marvel, because if the movie flopped and they were unable to pay the loan money back, they were instead going to have to give up the intellectual property rights to many of their most famous characters, like Captain America and the Avengers. This is the story of how the Iron Man movie saved Marvel from bankruptcy and how the MCU was born. But in order to really understand how Marvel escaped bankruptcy and what they were facing, you have to understand a little more about how they got there in the first place. Back in the 90s, Marvel was struggling as a perfect storm of factors crushed its comic book business. The entire comic book industry at the time was in a steep decline in the 90s, and Marvel's sales were plummeting because of this. This was in large part because collecting had actually created a bit of a comic books bubble over the years. There were many speculators that actively bought comics in the hopes of buying issues that would become rare in the future, and that they would then be able to sell later for a profit. But as is the case with all financial bubbles, comic book mania slowed down, and the bubble eventually popped. Comic book sales crashed, and Marvel suffered greatly because of this. And to make matters even worse, Marvel had taken on substantial debts from earlier investments in things like trading cards and stickers that left the company in an incredibly weak financial position with lots of debt. Combining this debt with its sales getting crushed from the comic market decline was catastrophic for Marvel, and it was forced to lay off a third of the company. This all ultimately led the company to declare Chapter 11 bankruptcy in 1996, as it was forced to restructure after it could not make its debt payments. Now, Chapter 11 bankruptcy is a relatively unique kind of bankruptcy, because it's effectively a reorganization of a company that is no longer able to pay its debts. When a company files for Chapter 11, the company's debt payments are temporarily paused while the company works with a court and its creditors to develop and agree on a plan to try and reorganize so the company can survive and eventually repay its debts. Through this process, Marvel was eventually able to restructure and exit bankruptcy. But the company was still facing major problems, as their business was struggling to be profitable at all, and it was at risk of completely failing. If Marvel was going to have any hope of surviving as a company, they were going to have to reinvent themselves and make major changes to the business. So in order to reinvent itself and survive, Marvel set its sights on the big screen as a possible avenue to evolve the business. But the problem was that with its weak financial position and debt, the company was in no shape to be able to fund a movie itself. So in the early 2000s, Marvel began to make a series of licensing deals where it sold the cinematic rights to some of its most famous characters to outside film studios so that they could make movies about Marvel characters. Using this approach, Marvel sold the film rights for X-Men to 20th Century Fox and the film rights for Spider-Man to Sony Pictures. This strategy allowed Marvel to get a lump sum of cash for the movie rights to their characters, without Marvel assuming the risk of whether the film actually performed well or not. For the struggling Marvel, this was absolutely essential, as they could not afford to take any big losses with their fragile financial state just coming out of bankruptcy. But the problem is that the structure of these deals wasn't just limiting the risk for Marvel. It was also limiting the reward and potential upside from the films doing well. For example, Marvel's deal selling Sony the cinematic rights to Spider-Man only entitled Marvel to 5% of any film revenues. So Marvel got very little benefit when the Sony films went on to be massive successes at the box office. And all of their other licensing deals selling the cinematic rights to other characters had similar structures, where Marvel was entitled to very little of the actual money made from the movies. So while this strategy was helping keep Marvel afloat and getting the company out of a tight spot immediately after their bankruptcy, the company also wasn't really growing either, and this approach was not sustainable in the long run. After all, there are only so many good characters that Marvel could sell the rights to before they would run out of things to sell. So Marvel decided that if it was ever going to truly improve its financial position for the long run, they would have to take a big risk and create a movie themselves. This way they would stand to reap all of the profits or losses from the film depending on how well it performed. But the big problem though is that Marvel did not actually have enough money to finance a big box office movie production themselves. In order to pay for that, they would have to take a huge risk and take on even more debt by getting a loan so that they could make the movie. And if the movie ended up being a flop, this would put Marvel in serious trouble, as they likely would not be able to pay back the loan, and the company as a whole could even fail because of it. But that was a risk Marvel decided that they needed to take if they were ever going to truly succeed. After negotiating, they were then able to get a $525 million loan from the investment bank Merrill Lynch to create the movie Iron Man. But Merrill Lynch knew that this was a very risky loan that they were giving to Marvel. So the terms for the loan required Marvel to put up the rights to many of their most iconic characters as collateral for the loan. This meant that if Marvel was unable to pay back the loan, they would have to give Merrill Lynch the rights to things like the Avengers, Ant-Man, Black Panther, Doctor Strange, and Captain America. That's right, the MCU could have been the Merrill Lynch cinematic universe if Iron Man had flopped. Marvel essentially went all in and bet their entire company on the success of the Iron Man movie. And if it didn't pan out for any reason, they would have lost the rights to some of their most famous intellectual property if the movie ended up being a box office failure. Luckily for Marvel, their big bet paid off. Iron Man ended up being a massive commercial success for Marvel, as it grossed $585 million on a $140 million budget. It was so successful that it became the launching point for the Marvel Cinematic Universe, which has now earned over $25 billion worldwide. The success of this one movie was able to turn the entire company around, and just 1 year later, Marvel was bought out by Disney for $4 billion. We are so used to the Marvel Cinematic Universe movies being massive blockbusters at this point that it might seem like the Iron Man movie was always going to be a slam dunk, and that it was destined to succeed. But that was far from the case back in 2008 when the movie came out. Before the film, Iron Man was one of Marvel's less recognizable characters, and reportedly there were around 30 screenwriters that turned down working on Iron Man because they thought the character was just too obscure. So Marvel took a huge gamble making Iron Man the focus of their first internally developed movie, and the entire future of the company was relying on the success of this one film in order to be able to pay back the money they borrowed to make it. But this calculated business risk was what paved the way for all of Marvel's future successes, and ultimately what saved the company. But be sure to let me know your thoughts on Marvel's business move in the comments below, and subscribe to the channel for more finance content. Thanks.